All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what I want to show to you guys is I have a new long-term stock portfolio. I do have my real life portfolio. That is a portfolio that I do invest my money in. But I have created a long-term stock portfolio with some amazing long-term holdings, which, you know what, in this video, because you guys are here, because you guys clicked and you're sticking with me, I want to reveal all these holdings to you. If you're looking to add any kind of awesome long-term holdings to your stock portfolio, we're looking at 45 different holdings. We'll go through ones like AVGO. I also have Intel, and I also have the Schmuckers company. I can't find that at that exact moment, but I have them up right now. I want to talk to you guys a little bit about these more long-term, low-yielding funds. I understand we are a dividend channel that kind of prioritizes high dividend yields. I do have my high dividend portfolio up still. I will continue to reinvest my money and see how it grows with high dividends. But at the same time, now I'm also looking to get into some lower yielding companies. I think there's obviously a great advantage when dealing with lower yielding companies. You're going to hold more of your capital and you're going to allow your money to grow over a more long-term period of time. And if time is on your side, that is pretty much exactly what you would want to do. I'm not saying that I'm necessarily taking everything away from the high dividend yields, but in my opinion, they haven't necessarily lived up to my standards. And when you're an investor, you are a manager of your funds. You got to do what you think is best for you. And I do think that I'm so grateful that we went on this long-term, more like short-term, high-yield dividend investing journey. I think it was very fun. It was very exciting, and I'm still going to continue it nonetheless, but I do want to reach into some more long-term stocks, so we might have two portfolios running on this channel in the future. So that is kind of what I want to talk to you guys about in today's video. I hope you guys do enjoy, and if you guys do enjoy, please do remember to subscribe. We're very close to 4,200 subscribers. We're at 4,190 subscribers, so thank you to everyone who sticks around. This channel is all about making money, so let's get into it right here. So this is my current portfolio. We're sitting at about $8,000 or so USD. And basically, you could see here, look, we're down 34.67%. I've got nothing to hide here. This is I keep saying long term. This is the short term high yield portfolio. You could see here, the dividend yield is obviously 22%. You're looking at about 30% here, kind of as like a, I'm not sure what this is, yield on cost, and then maybe this is your average dividend yield. You can see here we're bringing in about $200 a month off only $800. But the thing is, with this, you see this real kind of negative here, this 34% downside. This is where you're really taking a lot of that dividend, a lot of this 22% out of this share price, and you're getting a lot of like NAV erosion and price erosion. So that's something to think about when you're investing in high yielding dividend stocks. But now what I think it would be very interesting to shift into is more lower yielding stocks. See here, I have a portfolio of about 45 stocks. I don't own any of these stocks currently, but this portfolio averages about 3% or so, and it still gives you the fun of choosing individual stocks to invest in. Obviously, you could see even though they're low yielding, you have AVGO down about 12%, and I only created this portfolio about March 1st, so about 18 days ago. So you can see here, although they are low yielding, they do still go down, and there could still be, you know, opportunities to buy, quote unquote, if you believe they're still amazing companies. So in this video, what I want to do is I want to show you, even though Broadcom, a company which is the worst performer in this portfolio, down 12%, you can see long term it has done very well. One thing which would be super annoying, you buy AVGO, it goes down 12% as it has done here, and you look at the dividend and you say, wow, 1.7%, that's not really that amazing. But the one really nice thing is, if you are able to hold for the long term, for example, who knows what AVGO is going to do in the future? I don't necessarily know much about their business, but what I would say is that by looking at their past performance, you could see going all the way back to 2009, they have just increased their dividends and only increased their dividends. 2010, they started at 7 cents per quarter. And now you can see they're paying roughly about $5.25 per quarter. That is a huge dividend increase. If you bought shares 5 years ago at, you know, a measly $300 or so, which is still a decent size investment, you can see here your dividend percent, your long-term yield on cost would have definitely increased. And to be honest, the cool thing about investing in these low low yield funds is you never know how they're going to increase their dividends like AVGO did, because as they increase it over time, you could potentially turn those low yielding stocks into some high dividend payers depending on the prices you get them at and how well they increase their dividends. So that's something fun to think about when you're investing in these lower yielding funds. We have Intel as well, which is an example here. You can see over the past 5 years, just because these stocks pay low dividends doesn't mean they necessarily appreciate all the time. Intel, a stock that is pretty much traded sideways. I know a friend who bought in about 2021, 2022 at about $50 or so. Or actually, I'm pretty sure it was about 40, low 40s or so, right? Kind of where we're trailing at. And the stock immediately went down to about $25. That is not a great feeling when you're investing in a long-term stock. And fortunately, the price of Intel has recovered since then. You can see it only pays about a 1.17% yield. So the dividends aren't necessarily huge, but just like AVGO, I'm pretty sure they have been increasing for the majority of their stock. You can see going all the way back to 1980s. Wow, you see this dividend cut here. So that's something to also think about when you're investing in these long-term companies. You got to look for any kind of dividend cuts to see how it's not indicative of how the company is performing per se, but a company who's able to grow their dividends long-term, obviously a lot stronger than one that's been making cuts recently. Still, Intel, $180 billion company, so nothing to shy away from there. But I'm not going to go through everything here. What I do want to just show you here is a bunch of these stocks. So AVGO is one, Merck and Company Inc. We have Apple, we have McDonald's, Intel, Costco, ABT, Starbucks is a big one, Johnson & Johnson, BX, which is Blackstone, Kraft Heinz, I love Kraft Dinner, Kellogg's, I like to eat cereal every once in a while, TD, that's where I do my banking, and you could do your banking too, SJM, VOO, which is the Vanguard S&P ETF. So that's not necessarily an individual stock, but I have that in there just for a comparison here. We have Honeywell, AbbVie, Visa, AT&T, Coca-Cola, PepsiCo, Schwab. The Dividend ETF, this is another very interesting one because this holds a basket of different companies. If you want to grow your dividends month over month, and you don't want the hassle of buying all these individual stocks, you can buy SCHD, a great kind of more low yield long-term dividend ETF. I should have definitely brought that one up. That's on me, guys. But we got BDX, not really sure what that is. We have Lowe's, Realty Income, T. Rowe Price, Procter & Gamble, Enbridge, that's a Canadian company. We have Texas Roadhouse. I kind of like my fajitas, so I would go to Texas Roadhouse, and that's why I put it in there. We have WMB Williams Company. We have Colgate. I brush my teeth. I hope you do too. Energy Transfer, oil and gas company. This is a company I actually own in my real life portfolio. We have ones OKE, JPM, Hershey's, Waste Collections. Everyone has garbage. GPC, Caterpillar. We all like construction because we live in houses, I'd hope. Walmart, BMY, Shell, UPS, I ship my packages, Exxon, Kroger. These are all long-term stocks that potentially you guys could invest and hold in. And they could be companies that you use on a daily basis. If you eat cereal, if you like Kraft Dinner, if you do banking, if you buy baby powder because you're itchy. You can do anything with these companies and you can hold them for the long term. And as Warren Buffett mentions, I always like to bring this up. Rule number 1 is never lose money. Rule number 2 is never forget rule number 1. If you as a rule put your money in companies that appreciate, then realistically you're only going to grow your money, your underlying net worth, quote unquote, from there. Obviously, am I a great example of this? No, because I invest in high dividend yielding stocks. I invest in stocks which I know the share price is going to suffer, but the dividend should hopefully make up for that. And currently, you know what? I'm sitting at about even. It's not nothing crazy, and we're testing it out. But I'd like to definitely try out a new method where we go into more long-term stocks. I hope you guys, enjoy this little journey with me. It's going to be something different. It's going to be something interesting. It might be a bit slower, but at the same time, it's going to be fun to test out different strategies, and we can also compare these two. So I hope you guys did enjoy this video. This was just a little video that I wanted to show you some low yielding stocks and potentially what a new portfolio I might be doing might look like as I try to kind of branch into something different. I hope you guys did enjoy. If you did, we're up to 4,190 subscribers. And as I always mention, We are a YouTube channel here that's just prioritizing dividend investing. I like cash flow on a monthly basis. And obviously when we even look at the payout calendar here, which I understand this video is getting long, so I'm just going to show you super quick. You can see here that if this actually loads in, which I'll give that a second, that these dividends, they pay out so many times within a month. When you have 45 different holdings, you're looking at a bunch of different dividends kind of split throughout the month. So it's very interesting to see. And you know what, guys? I think this is very interesting. If we could have 45 different holdings that almost pay us daily, I think that is a great way that gives us a lot of motivation in terms of growing our companies and just building from there. So with all that being said, guys, this is the new long-term portfolio with 45 holdings. Currently, I don't have any money invested in these holdings, but I would definitely like to open up a brokerage account, which I've done, and I like to start investing in these. So if you guys are along for the journey, once again, subscribe, join, be a part of the community. Don't be a stranger, and I hope to see you guys in the next video. I hope you guys enjoyed, and I will see you then.